Bloomberg Audio Studios. Podcasts, radio, news.
Ladies and gentlemen, please welcome Merryn Somerset Webb.
Hello, Merryn Talks Money listeners. It's Merryn Somerset Webb. Before we get back to our regular programming in early September, we are bringing you something very special. Recordings of the conversations I had at Panmure House for the Edinburgh Fringe Festival. Now, for those of you who don't know, the Fringe is a 3-week arts and culture festival that began in 1947 and takes place in Edinburgh in Scotland every August. For the past few years, I have been hosting conversations about markets, economics and investing from one of the most special locations in Edinburgh as part of this festival. I do it from Panmure House, which is the last home of Adam Smith, philosopher and father of modern economics. It's where he completed the last editions of his bestsellers, The Theory of Moral Sentiments and The Wealth of Nations. This year, we did a 3-day run towards the end of August, and we are bringing you the slightly edited conversations from those 3 days. The panel I hosted on the first day featured Bloomberg senior reporter John Stepek, Alec Cutler, who's portfolio manager of the Orbis Global Balanced and Cautious Funds, and Tom Slater, who's the manager of the Scottish Mortgage Investment Trust. Right, thank you all very, very much for coming. I think in some cases, again, who's been before? New jokes.
Should have picked a different quote.
Should have picked a different quote. Should have done everything differently. Thank you. And I'm particularly grateful to you because, you know, we sold out again this year. We sold out incredibly quickly. The tickets were gone in a matter of weeks. And that allows me and John, and in particular, to say to everybody, I have a sold out show at the Fringe over and over every year. And we say that and we never, ever tell anybody how small this venue is. And so one thing I would appreciate from all of you do not tell people that there are only 60 of you. You could spread the general view that you're in something akin to the McEwen Hall. Would be grateful, right, John?
I think so.
Yeah. Okay, brilliant, thank you. Right, onwards. You probably all know how this works. What we do is we choose an Adam Smith quote each, not me, obviously, because I'm not doing the actual work here today. These three each choose their favourite Adam Smith quote. I ask them to tell us the quote, which they will all read from their phones because they no longer have the attention span to memorise them, am I right? And then we will discuss the quote. Right, my guests. Far side, I have Tom Slater, who is the manager of Scottish Mortgage and Investment Trust. Who holds that in their portfolio? John?
Yeah, yes.
I don't.
We'll get on to that.
Yes, okay.
On my left, Alec Cutler, who's the manager of the Orbis Global Balanced Fund and the multi-asset funds there. You've been on the podcast several times before, so those of you who listen to the podcast will already know Alec well, and Tom quite well, actually. And on my right, of course, John Stepek, who is, what are you now, John?
I am a senior reporter at Bloomberg, and I'm the author of the Money Distilled newsletter, which I think may have mentioned already at some point, but it's excellent and you should sign up for it.
But it is behind the paywall, but the subscription is very, very, very good value.
Oh,
right.
I wanted to see who owns the Orbis Global Balanced Fund. I saw all kinds of hands.
Oh, sorry, who owns the Orbis Global Balanced Fund? Trust me, by the end of today, you'll all be rushing out. Wealth managers in the audience, be ready. Right, we're going to start with, actually I can't remember who's going to start. You're going to start, Tom. Let's have your quote.
Consumption is the sole end and purpose of all production, and the interest of the producer ought to be attended to only so far as it may be necessary for promoting that of the consumer. And I thought maybe pick 4 or 5 points as to why that's relevant to today. Smith obviously insists that producers exist to serve consumers and not the other way around. And yet, in much of global trade policy today, the focus is squarely on the producers. So, I guess the headlines have been dominated by Trump's tariff policy and generally global trade barriers. You see it in subsidization of certain industries. I guess EU farming subsidies would be another great example of that. Yet Smith was single-mindedly focused on the idea that production only exists insofar as it makes consumers' lives better. So I think just a very, very clear difference of view from the one that policymakers have taken today. I think you see it in big tech. I think the reason that these companies have been so successful is because they've made consumers' lives easier. If it's Amazon, it's price, selection, convenience. They've given consumers better prices. They've given consumers greater selection. They've given consumers greater convenience, and been extraordinarily successful on the back of it. But obviously, the debate today is whether these technology companies have become too big, whether their ability to generate profits from all different parts of their business is no longer aligned with that. What Smith would focus on in terms of just producing that sort of consumer surplus. You can see it in the pharmaceutical industry and healthcare and drug pricing, and how do you get the balance between maximising the value for consumers there, who are of course patients, versus giving the companies sufficient profits to invest in R&D and in developing new drugs, and how is that burden shared? I think climate change and climate policy is almost an extreme example of this, that if we were just focused on consumers, then we would of course take these the extremely low price solar panels from China, extremely low priced electric vehicles from China, and consumers will be deploying this technology at an incredibly rapid rate. Again, Smith would say you focus, the only reason we're doing all of this is to make consumers' lives better.
But I suppose that what policymakers would say today is that it's inconceivable that Adam Smith could have imagined the type of world that we have today, interconnected in the way that it is. And policymakers would say that by protecting producers and by putting up security walls around various industries, they are protecting consumers much longer term. And by having productive industries inside their borders, they're creating the incomes that then create consumers. And without those walls and barriers, you may end up with countries that have consumers with no actual income to consume with. Yeah. So you can look at it from the other side as well, that Smith, this quote was designed for a different world.
Yeah, you could. I guess so I was here 4 months ago, and Sir John Kay was talking, and he made the point that we sort of have come to fetishize manufacturing or heavy industrial manufacturing, and actually do we really need it? Do we really want it? If you take the COVID vaccine as an extreme of that, this tiny almost microscopic product which had extreme value, should we not be focusing on those, the intellectual property, intellectual production, and yet government policy is so focused on, heavy industrial, making machines, manufacturing. Why?
It seems like where
Alec might be able to answer that question.
Well, it seems like where it comes out is when one country is effectively attacking you, using subsidies to kill off your industrial base, and then have an amazing gain in the future after they put you out of business, and you can't get it back.
And I suppose you could take it back to Tom, what you just said about, why would we not use all the cheap solar panels coming out of China? But that's the most mercantilist country that we've seen in many, many decades, and they now have their own very difficult problem, which is they have a very low level of consumption, which they're now desperately trying to fix. So does it make sense for us to absorb all the products from such a hugely mercantilist country long term?
Well, on the specific one, it depends how worried you are about climate change, I guess, and how quickly you think we should be going through that transition. But there also has to be a degree of realism about this, that they have an industry producing all the equipment that you need to generate energy from renewable sources that's on a completely different scale and a completely different cost base from everybody else. Now, we can debate where we've got to, but if that there is no part of the supply chain in most form of renewable energies that the Chinese don't dominate some part of. So we have to accept that trade-off.
It is interesting though, because I do, weirdly enough, I was looking at the chapter on tariffs a couple of days ago because I was curious to see if he'd said anything. He didn't say anything quite pithy enough for an actual quote. But the chapter's quite interesting because the issues that he raises, although he is the kind of free trade guy and he's kind of anti-mercantilism, where he says it might be okay, he talks about defence. So there's a bit where he's talking about how basically, I didn't kind of fully understand it, but Britain's kind of navy was protected, and what they were doing was basically trying to avoid the Dutch from having a monopoly on the kind of various sea trades. And he said that this isn't very helpful effectively for consumers, but it's a really good policy because it stops the Dutch from, who are our enemies basically, from getting a stranglehold on this important trade route. And the other issue he did bring up, interestingly, was employment, which this kind of surprised me actually, but he did talk about almost exactly the thing that people in Middle America and in bits of Britain, post-industrial bits of Britain like Glasgow and Liverpool, talk about, where you demolish an industry so rapidly by opening it up to competition that you create social upheaval. Now, I mean, Smith didn't really kind of make a big deal of that. He didn't think it was going to be a big problem because he assumed that there'd be a lot of other employment for most people to go into. And I think probably either there was at the time, or probably people just didn't really care as long as the lower orders were involved in employment in some way, even if it was farm labour. But I just think it's really interesting that the same qualms, even then, are basically the exact same ones that we've got today. And we kind of still haven't found a solution or a satisfactory solution. But I think if you look at China as an enemy, I don't mean an enemy, but a threat, a threat. A sort of like coldish war type thing, then maybe some retreat from globalization is, I guess, justified from that point of view.
There's been some wonderful scare stories recently about renewable energy product coming from China. They'll be able to turn off the turbines, shut down the panels. Is that possible?
I don't know.
If you put Chinese kit in the system, sure. Transformers and switches, you can do it.
Mm-hmm.
That's why you need to buy German. From Siemens Energy, you need to buy German transformers and switches. They would never turn off the turbines. They would never, no.
Never turn off the turbines.
The Germans have always been our friend.
I'm going to take that as a perfect time to move on to your quote, actually. I was going to do you next, but I changed my mind. Sorry.
Okay, sure. Science is the greatest antidote to the poison of enthusiasm and superstition. And I love that quote because it says to me that Adam Smith was the first contrarian. Where you're looking for, from an investing context, what we do every day is try and find where society has just run off in a direction, using their imagination, not weighed down by facts or physics, to come up with something that we should all be doing. And
give us an example, Alec.
It's really hard to think of one, but I think the war on carbon might be a good one. And if you invest into that or you research that and say, well, this is impossible. You can't have a grid that's entirely dependent on wind and solar. It's not going to work physically. You can invest against that. And then when the physics finally determine that your superstition and enthusiasm aren't really working out, you can make money doing that. What was interesting about this quote is superstition made sense, particularly in his time. They were still burning witches for the first half of his life. So that he was probably followed enough logic to think that really wasn't a good idea. But enthusiasm seemed like a really weird word. And Laura, my wife who's sitting in the front row, we were at lunch yesterday with Sir David Edward, who's a lawyer in town. And he said during the Scottish Enlightenment, enthusiasm was code for zealotry. That's unbounded by logic. So I don't know why they just didn't call it zealotry, but enthusiasm was the word they used.
Okay, so you are now saying, let's stick with the renewable energy as your example, you now feel that the enthusiasm for it has hit a wall of physical reality when it comes to, for example, the grid.
Well, who has a power bill here in the room? Who pays a power bill? Raise your hand. Have you seen it hit the limit yet? And by the way, you're being subsidized more and more and more because the politicians don't really want you to see that, the physical constraints on the grid impacting you in your pocketbook. But I think we're certainly seeing it. And we're seeing the governments react as you would expect them to. The one thing that we as contrarians can count on is politicians changing their mind and that's when we kind of get the big payoff. But there was a governor in Maryland who passed edicts saying we need to shut down all the coal-fired power plants in Maryland. And that was 3-4 years ago. Last month, the power bills all went up 30-40% over the ensuing couple of years in Maryland, and he started getting heckled.
Because of the cost of subsidizing turbines and...
Because the grid has now too much renewables and not enough spinning reserve in it to keep the inertia in the system. And he said, well, it's not my fault because that's what politicians say. And they said, well, whose fault is it? And he said, it's the utilities for shutting down the power plants. So they can change. It will never be their fault, but they can go to bed one night saying that it's all about renewables. We need to shut down biomass and coal-fired plants. And then they can wake up the next morning and you could have your prime minister come up the next morning and say, I am the champion of North Sea natural gas. There are no limits to what politicians can do.
Okay, so what's the solution? I mean, Tom says that what really matters here is how much you care about climate change and how much you think we should effectively suffer in order to attempt to mitigate it. What would you say the solution is?
I'd say the solution is what we're seeing now, and that's the physicists and grid engineers and chemists, and quite frankly, the oil companies and the utilities finally getting their seat at the table. No engineers are invited to the seat at the platitude table. They get invited afterwards when the platitudes blow up in our face. And they're now being invited to the table, and they're starting to craft an appropriate grid that has diverse energy sources feeding into it. So you can actually have reliable, attractively priced energy.
Okay. Have you got another example of your enthusiasm hitting physics?
This is what we do for a living. So 10 years ago in Europe, we don't need defense. To the point where, and we won't remember this because our memories aren't long enough, Europe wanted to pass a thing called social taxonomy. Does anyone remember what social taxonomy was? It was following on the heels of green taxonomy, which still exists in Europe, where they said we're going to charge anybody who produces carbon an extra tax so that they're incented not to produce something that makes carbon, which of course makes all your industry leave and go to China, who then take over and they'll charge you whatever they want when they're the only ones who can make gas turbines or something. So they were going to follow that huge success with social taxonomy, which would be applying a tax to companies that produce social ill. The top of the list, Saab, Rheinmetall, Leonardo, Thales, BAE Systems.
All defense companies.
I'm not making this up. We're going to apply a massive tax on those companies so that they decide to produce less. How is that based in any kind of rational thought with regard to how the world works? And we've seen when Russia invaded Ukraine for the second time, people at that time were thinking they never invaded them because they didn't have a patch on their green suits that had a Russian flag on it, so they really didn't invade Crimea. And now we've gone completely 180 degrees the other way. We're selling our defense stocks. Oh, by the way, just rolling back, because
you're selling
that
your defense stocks because you've had a great run with them and now they're expensive.
They're expensive because everyone wants to own them.
Yeah.
And the socially responsible funds, everyone remembers those, that slap sustainable on the end of your fund name. When they did that, they were no longer allowed to hold defense contractors back then because they were evil. They've all now decided to change their mandate such that they can own defense
so we now
stocks.
know that defense is a social good, right?
Yes,
it comes right down to it, there is no more a social good than the ability to defend yourself. So
Yes.
defense is now elevated from the worst thing in the world to the greatest thing in the world.
And ESG has become ESG-D. You can't have ESG without D, so now we can all own defense contractors, and we're now have been selling those off for a couple of years now.
And replacing them with?
Right now we're replacing with biotech. Still have quite a bit of nuclear
start
exposure.
Competing with Tom if you're getting into biotech.
It's fascinating. Biotech's really cool. And quite frankly, a lot of our ideas come from the incredible research that the the Bailey Giffords of the world do. It's super high quality, and that means that we don't have to do it because we're not really smart enough. We're just contrarians. We're the ones that will run into a burning building and check out the art, see what we can get out with.
Gorgeously symbiotic relationship between
What's
you two
the,
and your approaches.
what's the contrarian angle on the biotech stuff just now? Is that just because it's cheap?
It's
Yeah.
just pure deep value at this point.
Yeah.
So not thematic. You could, if it becomes big enough, then we'll craft a theme around it so we can tell a story and people can understand it. But we're able to buy biotechs that were selling at 100 times earnings 2 years ago for mid-teens or in some cases single-digit multiples.
What are your big ideas in biotech at the moment, Tom?
Yeah, it's very kind of Alex to say we're very smart, but the implication of what he's saying is we've owned these stocks that have gone down a very long way in the past couple of years, which is true. But one of the things that I think is really interesting in biotech is the idea that some of the tools that we talk about more generally, things like AI, offer a real hope of addressing some of the big challenges in biotech. You know, we're really just scratching the surface of our understanding of, you know, the molecular basis of disease, and you know, if we can actually use these tools to ingest the huge volumes of information, if we can use these tools to automate some of the processes which, you know, today, you know, involve a PhD at a lab bench with pipettes, if you can actually start to bring robotics and AI into these processes, then you offer out the prospect of massively lowering the cost and massively increasing the speed at which you can do this research. And I think that's the piece of it that's most exciting to me.
And that's exactly the kind of thing. There's this ongoing conversation going on at the moment around the AI bubble and the extent of capex spending inside AI and the extent to which this is all going to be horribly disappointing. But that's the kind of theme that would suggest there may be not so much disappointment in there.
I think you could be excited about AI without having a particularly strong view on that. But to give you some idea of the scale of what's happening here, I think gross fixed capital formation, so all capital investment by all companies in the UK, is of the order of $600 or $700 billion. Microsoft, Apple, Meta, and Google, the four of them will spend $400 billion next year. So those four companies will spend 2/3 of the total capital expenditure of the UK. And they're doing that because they're getting really strong demand signals. You know, it's a game we're not playing in. And you know, is it too much? Well, to them it doesn't really matter. You know, those numbers are big in every context except the profitability of these online giants. So, you know, they can use that kit in other ways. So I think they have a huge edge.
Will there be? You know, will 3 of those 4 names find that they've wasted their money?
I don't think any of them will find that they've wasted the money. Whether they've gone too fast or too slow, we don't know. But what you can see at the moment is more and more applications of this technology because it has such huge potential. And you know, now it's maybe not, you know, sitting, you know, chatting to your phone to your new AI friend, but actually, you know, like in areas like drug discovery or managing energy grids, or there's so many applications where just about everything we do as a society is short of intelligence. You know, if you can provide machine intelligence at low cost, it will make everything better.
You're nodding.
I'm psyched. Yeah, I think there's an existential risk element to their spending. I don't think it's all about look what we can do and we can make a ton more money. It's, geez, this might be a winner take most type of deal, which is the type of deal that they all were born on and succeeded in. Well, what happens if this new thing, this next thing that comes, is going to be just like the thing that we won, but it's going to be a tsunami over what we won. So Google's the easiest one to see in search. They dominate search. They have 90% market share in search. Are they going to have 90% market share in answer, which is replacing search? So I think that there's that. And, you know, from our perspective, and looking over your portfolio, it seems like you've come up with the same answer. You'd rather feed them ammo you'd rather own the ammo providers like an NVIDIA or the suppliers to NVIDIA like Taiwan Semi or the suppliers to them like ASM than you would trying to pick between, is it Google or Amazon or Microsoft or Meta or now new ones. So these are supposed to be the best industries in the world because there's no new competitors.
And suddenly,
OpenAI, brand new, and XAI, funded by the richest man in the world. Brand new competitors, and the Chinese, all coming in and attacking the same problem. So you've gone from having a monopoly like Google has in search to being one of 7 or 8 players trying to attack this next winner get most market. We feel much more comfortable providing the ammo.
Chipping away
and
from the very, very high valuations.
Yeah, we're
away from
not
the
smart enough to
concentration.
predict who's going to win.
Yeah.
And I'm not sure, if you look at the way they're spending, they're not sure who's going to win either. They're freaking out, in part.
John, what does it mean for the ordinary investors in the room?
Sorry, what? No, the AI thing. I think the AI thing's really interesting. But long story short, I'll say the thing that I've been saying for probably far too long, which is that arguably US stocks are overvalued relative to the rest of the world. And also, if you're based in the UK but you've been shunning UK stocks for obvious reasons, then actually they're pretty cheap. And certainly there was recently a piece of research that Schroders put out that everyone's talking about, which is that Americans are actually, because Americans are now thinking, actually I'm not sure that I should be quite as exposed to the US
and to these
as
very,
I was.
very concentrated group of tech
exactly,
and
particularly into
AI-related
the Magnificent
Yeah.
Seven, which is the big AI stocks. They're moving out of US assets, and one of the things that they are buying in quite significant amounts is UK stocks, believe it or not.
Finally, we've been waiting so long for American investors to start buying UK stocks.
Yeah, all we're waiting for now is maybe some consecutive inflows from actual UK investors into UK equity funds, because certainly according to the data, they've been selling consistently every month for, I think it's 3.5 years now. So you've got to think at some point the selling's got to be exhausted.
Oh, that Rachel Reeves comes to our rescue with compulsory purchase of UK stocks by all those of you who still have some pension assets left.
Get the British ISA going, that's what I say.
Well, we approve that. Right, John, your quote.
Right, this is a long one, otherwise I promise I would have memorised it. Right, the man's system is often so enamoured with the supposed beauty of his own ideal plan of government that he cannot suffer the smallest deviation from any part of it. He goes on to establish it completely and in all its parts without any regard either to the great interests or the strong prejudices which may oppose it. He seems to imagine that he can arrange the different members of a great society with as much ease as the hand arranges the different pieces upon a chessboard. He does not consider that the pieces upon the chessboard have any other principal of motion beside that which the hand impresses upon them, but that in the great chessboard of human society, every single piece is a principle of motion of its own, altogether different from that which the legislature might choose to impress upon it.
One of Smith's really snappy ones.
It is nearly there. Hang in, there's not much longer to go. If those two principles coincide and act in the same direction, the game of human society will go on easily and harmoniously and is very likely to be happy and successful. If they are opposite or different, the game will go on miserably and the society must be at all times in the highest degree of disorder.
We're going to have a new rule for tomorrow.
I'll make it a short one tomorrow. Right, so this is a quote from The Theory of Moral Sentiments, which was Adam Smith's first book. And I sort of think it has been the first self-help book ever published, really, because it's all about human psychology and why we are the way we are and how we think and what that means about how we should shape society. And the thing I think is important about this quote particularly is that it sums up his approach to economics and why, personally speaking, I think it's superior to the other kind of big names. So I would say that both Marx and Keynes, who are probably the two other major economic schools of thinking, they take a very top-down view. So Marx is very much the kind of grand scale of history, class war. It's not really about people, it's about what group you are in. And Keynes is kind of thinking about society and the economy as a machine with inputs and outputs, and you can tweak this and you can tweak that. But Smith isn't doing any of that. He's actually starting from individuals and what they want, and understanding that everyone has got their own desires, everyone's got their own motivation. And so the best thing you can do is to kind of just provide an environment that just basically lets people get on with it. So that's an argument for it's not an argument for no government at all, absolutely not. He's not a radical libertarian at all, but it is an argument for a smallish and simple state, one that we can all understand. And I think more than anything else, that second bit, I mean, obviously we've got a massive state, but I think that the real problem is that we now have governments that are full of people. We are surrounded by men and women of system. You know, everybody wants to dictate what everyone else can do. I mean, one of the biggest kind of employment areas of growth in the UK over the past 20 years has been in HR. The proportion of workers in the UK who work in HR has quadrupled in the last 20 years, and the UK now has more HR people per head of staff than anywhere except for the Netherlands. So you've got all of these people, and then this is before we get to the legal profession, and this is before we get to IFAs and tax advisors.
Careful.
I'm just thinking, I mean, how many HR people are in the room?
I'm thinking maybe some tax advisors.
But yeah, and this is all partly because we've made the system so complicated because of a desire to dictate and push people into doing various ways of behaviour rather than stepping back and saying, actually, you know, things could be much better if we just, within a narrow framework of defending property rights and, you know, preventing kind of, you know, violence in the streets, we just let everyone get on with what they wanted to do and make the best of their own lives without trying to dictate everything. And so I think that's what we kind of need to get back to. I mean, I saw...
What do you think Adam Smith with sort of that nice Rachel Reeves?
I think Adam Smith would see her as a kind of final boss of a kind of gradual deterioration over a long period of time that probably started with Gordon Brown is the one who I blame most for the way that governance and the kind of budget side of things has deteriorated into a steady stream of stealth taxes with the kind of aim of socially engineering different chunks of society into, you know, little boxes.
I mean, we were talking earlier and saying that Adam Smith would simply not have been able to conceive of a world filled with this much debt, of a state that took up 40% plus of GDP, with debt to GDP at 100%, with a yet another black hole of 50 odd billion coming up in 10 minutes, etc. He couldn't have understood it. It's so far removed from the world in which he lived that we have no quotes for high levels of state debt.
Well, to be fair, we do.
But
he does. There's
he has read moral sentiments. That was the test. That was the test.
There's a point, isn't there, where he talks about how France and England both had 100% debt to GDP, thinking about it in the 1700s. It was war related, and his point about that was, look, when a state gets that indebted, it never ever pays it back. They either default on it overtly, or they default on it by debasing the currency. And the funny thing is, that's basically what we still do. It's much easier now because we don't have gold and silver underpinning the monetary system. And it used to be that if you wanted to debase the currency, you had to tell everyone to bring their coins back to the mints. The mints would then stamp them and say they're only worth this now, and then give you back, you know, maybe like one in 13 or 1 in 12 would be kept by the king, and that's how he would make the money from everyone from debasing the currency. Whereas now you can just, you know, do it by printing more money or lowering interest rates. And you can keep it going as well. You can extend and pretend for longer.
John and I were having a chat at breakfast this morning. You two would have loved this. I'm sorry you weren't there. We're having a chat about how Rachel Reeves could raise more money, and we're trying to think of things in the UK that are not yet taxed. And I can't tell you how hard it is. So, any ideas? Anyone think of anything? Anything?
Do you want that to be public?
We figure she's going to get there anyway. She's going to get there anyway.
Cut this from the podcast.
Cut this. You know, we're thinking guilt, but she can't go for that. Anyone got any ideas of something you can think of that isn't yet taxed at all?
Financial transactions. I'm not saying I advocate it.
But they are. That's stamp duty. Every single financial transaction is taxed.
That's what your house purchase
We have on every it's not. We have the highest stamp duty in the world apart from Ireland, which is a bit high. We have 50 basis points on every single equity transaction. That's tax, mega tax. I mean, that's a wealth tax. That's an actual wealth tax in action every single time you buy and sell shares.
Well,
no, not that one. Anything else?
If you think about the government, particularly, I don't know, can I say this government? Mm-hmm. Will always endeavor to shoot themselves in the foot. They can tax childbirth.
We haven't got very much of that.
I know.
We need more of that.
No, well, we'll get less, of course.
We don't want less. We want more.
You told me to find something that we could tax.
Okay. All right. Although to be fair, they do kind of tax childbirth because everything around it.
Window tax. What about a front door tax?
That's a great idea. Everyone's got one of those. But isn't that council tax?
Well, it's an extra, isn't it?
Yeah, it is. It is. I mean, one of the things that you and I have discussed and we've discussed before is that every mistake in the UK is effectively policy driven. We can fix it all. We get very doomsday about it, but absolutely everything is fixable. And we get this vague sense, don't we, when we talk that we're getting close to the bit where there is no longer a choice but to change policy so as to fix it. We have a massive crisis, and then we fix it. We're getting quite close to that bit.
Yeah. Well, I suppose it's because the whole thing about the Laffer curve, and I know that people obviously, there was a kind of backlash against the idea of the Laffer curve.
We might have some people who don't know what the Laffer curve is.
So the Laffer curve is basically, see if you put a tax at 0%, obviously you'll collect no money. But if you put it at 100%, you'll also collect no money because nobody will do the thing that you're taxing at 100%. So basically, logically, there must be a peak point somewhere between those rates that collects more revenue. And it might be at 40, it might be at 60. But if you go above that, the amount you get will start going down, even though the tax rate is higher. And it sort of feels as if Britain as a whole is at the peak of its Laffer curve, because our tax take as a percentage of GDP is about 38% now.
It's the highest it's ever been. Every time we've nudged up to 38% historically, we've immediately sort of collapsed back down again. There's this sort of weird dynamic globally where every country seems to have its own level of tax relative to GDP that it's prepared to pay. So Scandinavian countries are prepared to pay more than we are, etc. And it doesn't matter what you do to tax rates in the UK, you can't get it above 38%. So we're hitting it. It's much lower in the US, isn't it?
Oh, wow.
Yeah, you've got your own level.
20
and
odd.
It's lower than us. And Germany are happy with 44%, and nothing. Anyway.
That's partly about the way that you pay for public services as well, because obviously one reason the Americans' tax take as a percentage of GDP is so low is because their medical costs are so high and they cover them privately. And I think people always say that, but Britain doesn't have a high tax take compared to other European countries, but our state pension is very different to most countries. Although people keep saying it's very low, it's not, and it's consistent. It's a whole. Everyone gets the same state pension basically, assuming you've paid in. Paid in is the wrong word. Assuming you have ticked the NI box enough. But in France, you don't automatically get a specific amount of state pension, and I think in most Eurozone countries, it's graded based on what you got paid when you were working, and various other measures. So all of these things are really hard to compare, but I actually don't think the British taxpayers or even American taxpayers are that different to European ones. It's just they pay for more stuff out of pocket.
In a different way, yeah. Okay, fair enough. Tom, what do they invest in at the moment? What's your favourite stock in your portfolio?
Oh, crikey. Well, they're all my favourites.
No, that's not true. I know that's not true.
What should you invest in?
Okay, let me help you. What did you most recently buy for the portfolio?
My most recent spending spree was in private companies, which is not particularly helpful. But I guess on the public side, one of the things that I think is really quite exciting, and it's a trend that has been going for 20 years now, which is that we've been spending more and more of our money online. And I think that trend is far from exhausted, and there are companies in lots of different parts of the world where they're not replacing established formal retail, but they're giving the consumers their first opportunities to get access to goods and services at reasonable prices. So Sea Limited in Southeast Asia, Coupang in South Korea, Mercado Libre in Latin America. But they're also moving from just providing goods and services online to providing financial services online. And these consumers have never had access to high quality financial services. The banking sectors in their respective countries were not set up to serve individuals. And so the opportunity is not just in retail, but it's all of financial services. So there's three for you that I think have these opportunities that will run for at least the next 3 decades.
Excellent, thank you. See, that's the kind of question. Look what you got.
I can't think in decades as a contrarian investor, but UK industrials and mid-caps, back yourselves. And you get paid.
Absolute horror, did you see that? I really hope you caught that on video. I want the still of that later.
So we drove from the Isle of Skye down to here, and we stopped at Drax Cruachan pumped hydro station, a marvel of British engineering, built and commissioned in 1965, a great year. Laura and I were born in 1965. And then arrived and walked up to go to see the tattoo and went by Balfour Beatty. Signs everywhere because stuff's going wrong here in the city and it needs to get fixed. Any kind of foundation work that's done in the world, usually 30% chance that you're going to use Keller, which are the companies that build the foundations for any project. And the cool thing about Keller is they get paid first. So we all know that every major development goes bust. You want to invest in the foundation company because the PowerPoint financing scheme works really well, and at least until the foundation guy gets paid. But Keller sells for 7 times earnings and a 4% dividend yield. This is an amazing company that's lasted forever. And if you believe in AI, if you believe in onshoring, reshoring, if you believe in that we're in a Cold War and that AI is the new arms race, you're going to build a lot of infrastructure. So why is there a company in the UK selling at 7 times earnings that's involved in every one of those things? You can't build a single thing without a foundation. And here's a company that leads in the world in that. And part of it is that it just happens to be on the London Stock Exchange and no one wants to own it because it's there and the money keeps flowing out. But we'll just keep buying it and buying it. We're buying it today. We were buying it a year ago. We were buying it 2 years ago. We were buying it 3 years ago.
And one day it'll come good.
One day it'll come good. Balfour Beatty's up 100% in 3 years, and we'll just keep plugging away at these British mid-caps that are really cheap and really well managed.
We appreciate it. Thank you, Alec. John, you got anything to add? Quickly, because we're down to the last 2 seconds.
Gold.
Gold.
Just gold.
Gold. Gold miners have been the real outperformer this year.
Gold miners have been stunning this year after a very, very long period of being terrible.
And we did tell you so, didn't we?
Yeah, they've pretty much doubled this year to date.
Yeah. Okay, I think we have to stop unless there's anything absolutely urgent from you. No. And beyond that, just say thank you so much to my wonderful panelists and to all of you for helping us sell out this huge room over and over. Thank you. Thanks for listening to this week's Merryn Talks Money. If you like our show, rate, review and subscribe wherever you listen to podcasts. And keep sending questions or comments to merrynmoney@bloomberg.net. You can also follow me and John on Twitter or X. I'm at MerrynSW and John is John_Stepek. This episode was hosted by me, Merryn Somerset Webb. It's produced by Summer Sadi, sound designed by Blake Maples. Special thanks to my guests, to Blair Barrows and to all the rest of the team at Panmure House.